Hello, my name is David Mitchell and I'm a Chartered Financial Planner at Kingston Smith Financial Advisors. So here's today's agenda. Today I'll be talking about what I mean when I talk about tax wrappers, why to use tax wrapped investments, what the annual allowances are, and finally the advantages of using your allowances early. Tax wrappers are simply accounts that provide some tax advantages so that your cash is working harder for you. Most people will be familiar with individual savings accounts or ISAs and pensions, and some will have come across investment bonds. We're here to help you and your family make use of all of these with a personalised plan to meet your goals. ISAs and investment bonds have no tax relief on the way in, whereas pensions do. All these wrappers benefit from the ability to grow your wealth in a tax-advantaged environment. With ISAs, there is no tax at all when you come to take withdrawals, whereas when taking income from pensions, you can receive 25% tax-free and the remainder is taxable. Investment bonds can provide you with withdrawals with no immediate tax to pay. You can hold a multitude of different investments within these tax wrappers, and using the investment platform, you may be able to move cash between multiple tax wrappers. When we compare this with non-tax wrapped investments such as bank accounts, investment accounts, and investment property, we can see that there are many ways that the Exchequer will benefit from your unwrapped investments. However, even for untax wrapped investments, there are a variety of personal allowances to take advantage of. Looking at the annual allowances, for ISAs it's a very generous £20,000 per person for either a cash or stocks and shares ISA, and you can now open both cash and stocks and shares ISAs with a total investment of £20,000. For junior ISAs, the allowance is now £9,000 per year, which has increased dramatically since last year, and there's a £4,000 allowance for lifetime ISAs, which can be used towards your first home or held to help fund your retirement. Pension allowances are complicated to say the least, but most can benefit from tax relief on at least a £4,000 pension contribution if they make it for themselves or via a company, and £3,600 if investing on behalf of someone else, such as a spouse, child or grandchild. For investment bonds, there is no upper limit, but the minimum most providers accept is around £5,000. So what's the importance of using these allowances early? Well, for one, in many cases, allowances cannot be carried forward into the future tax years. This is especially true of ISAs. Pension allowances can be carried forward for 3 years in some circumstances, but as each tax year starts, you'll lose any unused allowances from the 4th year. Our view is that time in the markets trumps market timing. The longer your investments are in the market, the more you will benefit from the miracle of compound returns. More fortunes have been lost than made by trying to time the perfect entry or exit from the market. Investing regularly through the peaks and troughs of investment markets will give you a better chance of capturing growth through pound cost averaging, reducing the risk of investing all of your savings in the run-up to the end of the tax year. For a patient investor with a long time horizon, the suppressed value of the current markets represents an opportunity to invest at a significant discount to the valuations available at the beginning of the year. Investments can fall as well as rise, of course, but over longer time horizons, the risk of inflation and underperformance is more significant for cash than it is for shares, bonds and property. And finally, to balance the books, the Chancellor will be eyeing ways of increasing the tax take. Allowances available now may not be so generous in the future. Please do feel very welcome to get in touch so that we can discuss your challenges and work together to help you achieve your goals.